To be very clear, like what we did is we looked at the early stage landscape and said, what is missing in this landscape? And can we build a firm and think about it as a product that fills that hole? And so we spent tons of time with clinicians really interested in investing in early stage companies to understand where they were having challenges accessing funds or like getting enough volume and expertise and angel perhaps to be successful. Whenever you're doing early discovery for any business, whether it's, a startup or a firm, when you can find something where like all of the stakeholders intersect and what they're asking for and they all urgently want it, like you know that you have to build it. You have to build it, right?
Welcome to How I Doctor, where we're bringing joy back to medicine. Today, I'm joined by Dr. Rebecca Mitchell, who, along with her business partners, spine surgeon Dr. Jonathan Slotkin, and journalist and VC Christina Farr, decided that if healthcare innovation was going to actually serve patients and clinicians, then clinicians needed a seat at the investment table. Together, they founded Scrub Capital, a venture firm that's rewriting the playbook by putting over 800 clinicians in their community at the center of how healthcare startups get built and funded. They're investing in companies solving real, often unsexy problems like comprehensive GI care, pharmacy infrastructure and prescribing, fertility access, the kind of stuff that might not sound groundbreaking, but that really, truly matters when you actually spend days caring for people. And what I find so refreshing is they're not trying to chase hype. They're not obsessed with unicorns or the next health tech buzzword. They are laser focused on impact. They know impact because their investors are doctors doing the work today. They want their tools to make care better, safer, more human, and making sure those tools are shaped by the people who actually use them. Dr. Rebecca Mitchell, welcome to How I Doctor.
Thank you for having me.
Rebecca, maybe can you start by just describing the origin of Scrub Capital as like a Slack group initially?
Yeah, it just started as a Slack group, but I'd say even before that, my LinkedIn box and email had become utterly overflowing with founders trying to connect with physicians like yourself, Graham, right, who've been in the trenches, know the medicine, know frontline care, but also understand technology and business. And on the other side of the equation, sometimes in a week, hundreds of clinicians who were trying to reach founders on the other side, who were looking for a creative outlet alongside their continued practice and had come to the conclusion, right, that they had something to contribute, having seen a bit of the messes we've made of companies perhaps over the last 20 years. So it was clearly a need that each side was expressing and the right time. So we already had the hypothesis that there was an opportunity here to pull together people who understand the medicine, have experience in building businesses, have experience in technology, and create a scalable model for supporting early stage companies that kept both sides aligned for the long-term success of the business. And the Slack group is really the way that we tested that hypothesis.
And now you have like over 100 clinician investors, is that right?
We do. We have around 100 clinicians who are LPs, and they are clinicians, so the majority are physicians, but we're very intentionally creating a LP base in a community that represents the entire care team because, of course, there's many different things in medicine and tools that we are creating that impacts everybody on the care team as well as patients. So there's around 100 LPs that are clinicians, and then even beyond the LP base, we have another 800 clinicians that we support as a community alongside the firm, and they are very materially involved in everything that we do.
LP is limited partner, is that correct?
Yes.
And tell, maybe just for listeners that don't know what that means, just put it in plain English, what's an LP?
Sure. So a limited partner is somebody who is putting their capital into a given fund that is run by general partners. So John, Chrissy, and I are the ones who started the firm, run the fund. We're responsible for raising money, bringing in the companies, running all the processes to decide who we invest in, who we don't, and creating the infrastructure to support them. But really, the majority of the capital and the majority really of the expertise is coming from that LP base and the larger clinician community.
And so just in the same way that I could go out and invest in Apple and buy $50,000 of Apple stock, I could also be an LP and invest my money in Scrub Capital, and then you guys pool that and then decide how the fund is going to invest those dollars to help new companies. Is that correct?
Yes. So a little more complicated as a fund. Of course, if you go and invest in public markets, it's completely liquid, and you generally have, less insight into what's going on within the companies, and certainly usually depending on who you are, far, far less influence on what the companies are actually doing. For us in the model that we've created, we've really flipped that, where the founders and the companies are highly, highly incented to be quite transparent and regularly be interacting with us and sharing what is going on. And really the reason that they come to us and pitch Scrub in the first place is they're really seeking that kind of transparency and exposure to people like you.
I think we've seen in medicine when tech EHRs have not really always listened directly to clinicians, especially at the ground level as things are getting created. And so it's so important that we have physicians in the room giving those companies the insights about, no, I wouldn't want this screen here, or don't put that over there. I want things to work this way. And that's going to be the best success for your business and probably my investment as well.
Yeah, absolutely. And, what is really exciting with the time that we're in is the clinicians are giving these companies feedback and their perspectives both on, look, here are the specifics of the workflow that you're getting right or wrong, right? Here's kind of the clinical elements that are right or wrong. But so many clinicians have now actually built businesses themselves, or they are polymaths, right? Where they really understand how to code. I love the clinicians who code community or who dev community, to give a call out to that group. And so really they're experienced polymath minds that also have the clinical expertise and experience. And that's like a unicorn persona that very few existed, right? Even 10 years ago. And now there's hundreds. And those are really the people that we've been very fortunate to pull together in the community.
Yeah, I mean, even with off-call, we have a bunch of physician investors, and I will say they have been so helpful in helping us vet ideas, send them screenshots, send them demos to get their feedback. Oh yeah, I like this part of it, but we would never say it that way.
Mm-hmm.
Or, it's that little subtle nuance, that detail that is so valuable.
Yeah.
For us creating a product. And I'm sure it's the same with your companies as well.
Yeah. I mean, anybody who's built products and brought them to market, even, certainly consumer products, but I would argue really any product understands that it's often in those nuances that you make or break the success of your product and your business. And you have to get that last 10% right, especially in the age of AI.
Yeah, health tech has been seeing a lot of investment dollars coming in the past several years. What's your theory? Like, what's the case for why Scrub is going to really win in the very crowded health tech investing landscape?
Yeah, fair. And I, rightly get this question all the time by people thinking of participating in the fund. So I'd say, look, Scrub from the beginning was created not because I want everybody to pile in money and invest into Rebecca Mitchell's vision for where healthcare can go, right? Like, yes, I have opinions, but to be very clear, like what we did is we looked at the early stage landscape and said, what is missing in this landscape? And can we build a firm and think about it as a product that fills that hole? And so we spent tons of time with clinicians really interested in investing in early stage companies to understand where they were having challenges accessing funds or like getting enough volume and expertise in angel perhaps to be successful. We spent tons of time with founders to understand what was or wasn't working for them when it came to, there's already strategic syndicates and angel groups out there, but why are those actually pretty high overhead to work with, and what is limiting their ability to stay on cap tables over time? And we spent a bunch of time with other early stage VCs and late stage VCs, right, to say what kind of strategic partner are you most missing on the cap table? And, whenever you're doing early discovery for any business, whether it's, a startup or a firm, when you can find something where like all of the stakeholders intersect and what they're asking for, and they all urgently want it, like you know that you have to build it. You have to build it, right? And so like we didn't create a firm that is, traditional, other than the sense that we are just as serious about, portfolio construction and underwriting, and like we really intend to be, an at-scale institutional VC firm. We really started from first principles, right? Like any good product person would, and said, like, what does everybody need, and can we build a sustainable business in giving them what they need? And look, like, that was a hypothesis that we came in with, but the signal was so strong from day one, right? We put our message out there about what we were thinking of creating and had over 600 clinicians immediately raise their hand that wanted to be part of the experiment, and incredible people that have successful exited businesses, like major business leaders, right? Like really special individuals. I'd say the the brand and the word has spread fastest amongst the founder community. And half of the investments that we've made, but we don't have an army of associates cold reaching out to people. Most of the time, people are finding us and saying, look, we don't need your money, right? Like, we're already full, right, as a round or whatever. We have choices. What we want is all of you on our cap table. Like, you tell us, right, how much you can put in. And, I'd say as the founders are getting excited about it and the word is getting out, even other early stage VCs are starting to make up a large portion of our opportunity and deal flow with the exact same message, right? Like, we want you on the cap table.
Hey doctors, AI isn't coming, it's already here. Whether it's scribes, risk prediction, or chatbots, AI is reshaping medicine right now. And that's exactly why I created the AI Secrets for Clinicians webinar. Along with my friend and Valdar Health founder, Dr. Sarah Gebauer, we compiled a practical guide featuring a roundup of the best tools, prompting tips, and educational resources for all clinicians to get started with AI. This is the starting point. You need to learn how to use AI safely, ask the right questions, and take the lead on incorporating this new technology into your practice. Visit offcall.com/AI guide. That's offcall.com/AIGUIDE to get started. Thanks. Say I'm a physician. I want to become an LP. I think people understand generally that, like you said earlier, investing is more risky than going out and buying Apple stock, because I could also go out and then sell that Apple stock the same day if I really needed to or wanted to, if Apple tanks or something like that. How do you describe the risk of investing to a physician who, I think physicians tend to be kind of risk-averse people as well?
Investing is like anything in life, right? Like, the risk is usually relative to the reward. And if you look at venture as an asset class, of course, it's different vintage over vintage, right? Like, we had the headiness code we can talk about. If you are able to get into the top quartile of performing venture firms, especially if you can get up into the top decile, right? It outcompetes any other asset class in terms of returns, even adjusted for risk, even adjusted for the timeline your capital needs to be in these companies. It does. So really, the question is, are you able to get into firms that are performing at that level? If you can't, I would argue maybe it's actually not a great asset class to incorporate into your portfolio. One of the reality, though, is that many, if not, I'd say the majority of the firms that are at that level, they're not open to new LPs, or they're certainly not open to new LPs that can't throw down, double-digit millions and commit for multiple fund cycles. So my advice is always, if you can get into that, diversify into that with whatever proportion of your overall, asset base you feel comfortable like risking. Because you're right, like, there's some cycles where people lose their money. Even the best firms, right, don't perform. If you're not able to get into the top quartile or decile, really you need to think about it like you would finding even an individual startup. You need to find the emerging managers and the emerging models where you're like, there is alpha here. They have a real opportunity to get into that top quartile for performance. And if you participate early, that's when the firms will bring you along, even when, eventually they get to the place where they can go court the mega like institutional LPs.
Take us behind the scenes of what happens to get to a yes. Like, how does the process work? I've got a new amazing thingamabob I think is going to change the world and make me and Scrub Capital a lot of money. What's Scrub's process like?
Well, if you're at the idea stage where you have an amazing thingamabob in your head, you're probably not yet ready for venture capital, right? And I'd say any VC worth your salt that you should spend any time with is having this conversation with you very, very early. Like, is venture as an asset class, right? But certainly in terms of timing, like, is that right for where you are in your company building? Also a longer conversation, but always want to see that conversation happening. For Scrub, we've been very intentional about being very easy to find for entrepreneurs and founders. And I mean, as I was alluding to earlier, like, we have the great fortune of not having any issues seeing wonderful investment opportunities and having a high volume of deal flow. We're doing it because we generally believe the gatekeeping that happens around VC is a lot of BS, candidly, right? Like, good ideas can come from anywhere, and particularly in healthcare. Like, Again, like we really, really believe that people that understand both the problem and can imagine new possibilities and then shepherd them through all the dragons, right, around the corners, like in bringing something like that to market in healthcare, are the best people to be building these businesses. So we have a application form that anybody can find openly on the internet. Every single one is reviewed by a GP. We pick around 25% of those because we are receiving high hundreds every quarter. And really fortunate that we'll do a one-on-one phone call with the founder. And at that point, we're assessing for very similar things to what any good early stage investor will, right? Like, are you going after an opportunity in a market that is large enough or could be large enough for a venture scale return? The and to that is different about Scrub is there has to be the and where we actually care if you are successful in solving the problem. So it's both, right? There's a real financial outcome opportunity there, and we actually care for humanity and like human health if this works, which is different than other funds, and I'm very transparent about. We're assessing the person, right? Are you the sort of person we like missionaries, not mercenaries, people who are like, I'm willing to work on this for decades? Like, yes, I need to get my capital out faster than that, like to be a successful VC, but we believe it takes that long to build a durable generational business. And those are the kind of ideas and companies we want to back. And then really we're all assessing for the early signals that you are on your way to product market fit. And if you're really early, there are more process signals, like how you are approaching really understanding the problem, understanding your buyer, understanding your end user, what experiments are you running. If you're a Series A company, there's more data. It is not true that there is no data to assess this in an early stage company. I think people that have never built things say that as investors, right? There's lots of data. And then finally, and again, this kind of gets back to our mantra that we are both excellent thematic investors in healthcare, and we are building a institutional grade firm that we want to be generational. We're also assessing if it fits, right? Our portfolio construction and like, is the valuation and deal frame actually going to make sense for us? Because ultimately, we do need to be making money as a firm while hopefully the companies are, doing good for us to turn this into the sort of entity that can put real capital leverage and power behind clinician voices and perspectives.
It's interesting that you said that you're open to, and you look for people that are willing to invest their time and work on this for decades or more. And my reflection on that is that's so important in healthcare because we know how slow healthcare changes.
Mm-hmm.
I think Cursor or one of the big, one of those tech vibe coding companies just got acquired by OpenAI for like $3 billion. And they didn't exist, I think, like 3 years ago or something like that. And it's so different in healthcare. We both know that healthcare changes at a snail's pace compared to probably any other industry. And so it's really important for an investor to have that insight and understand, we can't be looking that this thing's going to get acquired in 3 years because healthcare just doesn't work that way.
Yeah, I completely agree. Even post-acquisition, and I have lived this, I've seen this in companies that I've been part of acquiring, myself as a company that was acquired. It is just as important that those founders and leaders are sticking around post-acquisition as it is up to the acquisition. And one of the things that keeps me up at night, candidly, beyond like building this firm with my partners, right? Because it's a startup, keeps me up at night, is are we doing the right thing post-acquisition and ensuring these amazing companies with so much potential continue on that trajectory? Or are we just acquiring them into entities that are going to ruin them? So we are really thinking about these things, at least at the level of the founder mentality from day one.
What in particular are you excited about right now?
We are really excited about three opportunities that we've actively invested into already. One, it's a really important moment for replatforming of a bunch of core infrastructure in the healthcare industry.
Rebecca, what does that mean, replatforming?
Yeah, so it's a fancy word. Basically, we have the opportunity to swap out a bunch of things that were built with legacy tech.
Legacy, yeah.
Were built reflective of sort of legacy stakeholder kind of behaviors and power bases. Perfect example of this, we invested in Photon Health as one of our first investments. And they have the opportunity to fully replace SureScripts and the way that digital prescriptions are moving around in our country today, but do it in such a way where patients, prescribers, like it's far less friction and overhead for them, and you actually put kind of the control back in the hands of people, right, that are in that intimate like relationship. We see a lot of opportunity and have invested into tech-enabled services companies that are seeing that there is a big gap in what people need, and there's a delay in bringing best practice for clinical care and science to those people because it's just, I think Morgan Chanham has actually written really beautifully about this. There's a lot of delay right now and like getting these things through existing care delivery models. And sometimes, not always, the right answer is to build a care delivery model to just bring it to people faster. And then third, and you're seeing this in every industry, right? But software advances are really unlocking different capabilities in hardware right now. And there's so many things in healthcare that are a combination of physical goods, particularly, hardware and software. And we backed a couple companies in this category, two I'm really excited about. One's Conceivable Life Sciences. They're automating a huge portion of the embryology lab, both from far lower cost for IVF cycles and much more successful IVF cycles. Another one, really recent, Canopy Health, that is very working on the problem of workplace safety. And that is a whole unbelievable topic when you start digging into the data. But, in both cases, they didn't have to invent new, extremely expensive hardware. It was taking stuff that I'm going to call it off the shelf, right, but pre-existing, but applying, latest practice in software and AI to them.
It's interesting. Your third category of combining existing hardware with improved software. I just downloaded this app from Adobe. It's called Project Indigo, and it makes your iPhone better by using computational photography techniques to make the same hardware lens and the same camera provide better photography, especially in low light as they're pitched. So, I think we're going to see that all over the place, including healthcare. Why do you think it is that health systems are struggling to deliver these more focused care areas, and that's an opportunity for Scrub Capital?
The predominant business model they are all in is fee for service, right? And they are all flying the airplane while trying to fix, all these cliches, right, are absolutely true. I would also offer to be a bit edgy that when you
We love edgy.
Reggie, that when you look at the people being brought into not all, but most of these institutions that are tasked with reimagining, sort of digital or virtual first care, they are not often people that have built those things to scale in other environments. And if they are very disempowered compared to other folks on the team that have more traditional roles and backgrounds in medicine. That is a fact. It's something people talk about all of the time in product and engineering and even clinician communities, right, where they also have those skills. And we see these roles pop up and we're like, we don't get it. All of these credentials are all around, things that have very little bearing or less bearing on your ability to build really transformative things and bring them to market than the kinds of things a technology company would look for. And I'm not saying those individuals should run the show by any means, but it's a very similar perspective that I have to venture investing, right? We need these clinician voices and perspectives at the leadership table alongside people that really understand financial investing, right, and the other pieces. It's not an or, it's a with, and we are not there yet in that with statement inside some of these businesses.
I got a little game for us to play. I'm here in San Francisco. You're in venture capital. The hype is everywhere. Let's play overhyped, underhyped. Just give me your gut reaction. Overhyped, underhyped. You ready? Overhyped, underhyped. AI clinical tools, ambient documentation, decision support.
Appropriately hyped but overpriced.
Ooh, love that. Longevity technology, biomarkers, rejuvenation, cellular reprogramming.
Appropriately hyped, but the wrong things are often being hyped. The consumer demand for this and the opportunity to use this to pull people in to being proactive and super engaged in their health for a massive, it's a massive opportunity for primary care and public health in particular. The specific ways some companies are doing it, not the right answer.
Virtual specialty care.
Currently underhyped. That's an area that went, it was a darling to invest into and build, it went out of favor. candidly because we mispriced a lot of those companies, right? And I'd say it's currently underhyped. There is so much pent up patient and consumer demand for it. And you are increasingly seeing those companies co-founded and built with clinicians and physicians in particular that are absolute top of their field. They're like, this is how I want to practice. It's the right thing for patients, and I'm going to build it into this vehicle.
Yeah, I'm going to build my version of the perfect suite, and I love it. Rebecca, mental health apps. So could be CBT platforms, could be AI mental health chatbots.
Ooh, this is one, candidly, I'm not super decided on. I like this. This one is similar, I'd say, to the longevity answer. I think there continues to be just massive, massive need worldwide. This is one where the nuances of the product execution, I think, really, 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 really matter. And in the last cycle, you saw a number of companies like get quite big and quite successful in terms of like kind of scale and funding. But because of the hyper growth, like at all cost period we were in, the craft wasn't as there in the product as there is an opportunity to be. So I'm hopeful about this latest kind of vintage.
You can't have survived the COVID pandemic and not have some mental health scars that could be worked on, Next up, wearables and remote patient monitoring.
I would say as a standalone, overhyped in its criticality to making almost any category that we can talk about work. I'd say undervalued right now.
We got to go to GLP-1s and obesity care.
Ooh. I don't think it could be honestly hyped enough. And I'm not saying like the specific medications, right, in market right now are the ones that will be here and used widely 10 years from now. But the attention to like obesity as a real like diagnosis and disease, like the attention for the need for sort of specialized care, the attention to the fact that it's like a chronic thing people are living with, and the impactfulness of this new class of medications and like the innovation that you're aggressively seeing, right, as people improve them in different ways. I don't think it's wrong when people say like it's almost equivalent to the penicillin for the age that we live in. It's so important.
And I'm excited and very curious to know if the reports that we're starting to see around addiction and people's relationship to food and cravings may have some place in this space as well.
Absolutely. Absolutely. I think it's just in really early days of understanding all the different applications.
How about fertility technology?
Ooh, so clearly we invested in 2 companies in this area,
Exactly.
right? So you clearly know the answer to this.
Yeah.
I think it is underhyped right now, and it's going to become more and more prominent over the next 5 to 10 years. And of course, part of it is that senior leaders in government and industry are not talking about it. But even more so, like GLP-1s is actually a good example of this. But we now have a lot of different effective tools for helping people in their fertility and family building journey that actually work quite well, and the cost of those things are going down. Now, all kinds of issues in larger society about what it means to be a parent these days, right? I have 5 kids, so I think about this actually all the time. But there's so much pent up demand for better solutions that people are now building for.
Yeah, I've got 3 more.
Yeah.
Here in the home stretch.
I like this game. Play it as long as you want.
Psychedelics. So we just talked with Shoshana Ungerleider about psychedelics for the end of life, and psychedelics for PTSD and depression. Underhyped, overhyped.
I would say underhyped in the broader sense, mostly because a lot of people are uncomfortable fully engaging with the topic. And I think a number of the examples that you just gave, particularly for some of the severe cases when it comes to the mental health, people who I think are the most brilliant individuals in the field and trust really, really believe in it. And I think we should be willing to take quite a bit more risk in those categories in particular if people are willing to try these things for their own health.
Yeah, I agree. Let's do direct primary care and cash pay. Trump just signed the big, beautiful bill. It's going to allow people with HSAs now to use those HSA dollars for DPC, direct primary care. Underhyped, overhyped?
I would say underhyped to its relative to its potential. I personally, this is not speaking for the firm, but I personally hold the perspective that primary care should be extremely accessible to everyone, and I don't actually believe the best way of doing that is lumping it into like super expensive, expensive care and insurance, because you inherently are putting a bunch of other like third-party people and incentives in between the individual and the kind of primary care that works for them, and the people providing that care. So I think it's a fantastic actually aspect of this quite complex bill, and it's a long time coming.
Yeah.
People have been working on this, right,
Yeah.
for like 15 plus years. Like since I was in medical school, DPC has been something largely physicians, right, have been pushing.
Yeah, and I think, I mean, that's the thing that we hear from DPC physicians as well. Like, it gets all the crazy perverse incentives of insurance out of the room, and it gets the doctor wanting to take the best care of the patient. Last one here: patient engagement platforms, reminders, education, nudges.
Okay, similar answer to this as I said for wearables. I'd say as a standalone thing, I'm not personally
Yeah,
a fan. Being exceptional at that as part of building any product could
it's
not
like a
be more
necessary
important.
feature for any. Yeah,
Yeah,
yeah.
yeah, absolutely. But I'd say as, if not vastly more important, right, is actually providing a thing that people really, really, really need and want, right, and is unmet in healthcare, and they will tolerate a lot of those other pieces but not being perfect for a long time, which is why I don't love wrapping things that are not working for people with patient engagement platforms. That's like the specific category of this that I think is just not worth spending time on.
Rebecca, I want to conclude by zooming out and talking about the future of health tech. Sam Altman recently said it is the best time ever to start a company. Straight up, do you see it that way? Is it the best time ever to start a digital health company?
uh, I'd say I think I agree with him for a large confluence of factors. Of course, the technology piece of it. I mean, we have people with like a whole diversity of experiences and skills that have now had a lot of exposure to healthcare because of the last few cycles of digital health. We have more, consumer kind of pressure and openness to trying things that never existed before, which is like a nice, even if people don't intend to be in that channel forever, like a really good way to get started and test. But more importantly than that, I'd say the right time to start a company is when you have a genuinely unique insight on how to solve a big, important problem, and you feel you're the right person to solve that problem, right? The quote, like, the market waits for no one, I think is attributed to Steve Jobs, but who knows who originally said it, that it could not be more true. Like, do not sit on a great idea and your gut level need to build something. Your life will pass you by and the opportunity will pass you by. So if you feel it, go do it.
I
Here's
love
what Sam
it.
Altman says.
I love it. That was such a great segue. Let's close by telling people how they can get involved.
You don't have to be an LP to also participate in the fund. And we didn't go into tons of detail around this, but a really critical part of our process are that people from that larger 800 member community, like, they are looking at every single investment with us in something we call our community pitch and the post-pitch diligence. So if that is interesting to you, like, you can be involved in that way, no capital required. We also do a lot of programming for clinicians alongside the core fund work around, learning to be a really excellent early stage investor, whether it's, via us, with us, or separately. We have a whole initiative to put really incredible opportunities in front of these clinicians that are seeking to get more involved in venture or startups, whether, most of them fractional, candidly, because we don't want to pull people away from their practice, right, if that's not something that they're looking to do. And the community itself is just incredibly rich and supportive of each other as much as they are the portfolio companies that we invest in. So would love to meet clinicians that are optimistic about what we can do. Yeah.
What's the best way for people to join that community?
Reach out to me, Rebecca Mitchell, easy to find on LinkedIn at Scrub Capital, Rebecca@scrubcapital.com. You can go to our website, which B1 website, but we do have the links to the application to be part of the community, as well as more contact information there. I will say it is an application process to get into the community. First and foremost, we are screening for, like, do you have optimism and openness to change, right? More than anything. And then, the rest of it in terms of what your medical specialty is, what else you've done. very important, but secondary. So we invite you to apply. Would love to meet anybody for whom this message resonates.
Amazing. Dr. Rebecca Mitchell, thank you for being here. It's been totally a pleasure to meet you and get to talk with you today.
Yeah, same. Thanks for having me.
Thanks for joining me today. For interviews with physicians creating meaningful change, check out offcall.com/podcast. You can find How I Doctor on Apple, Spotify, or wherever you listen to podcasts. We'll have new episodes weekly. This has been and continues to be Dr. Graham Walker. Stay well, stay inspired, and practice with purpose.